Hi, good morning. I'm starting a morning routine. So, the stock market and what's going on out there, the basics of investing, value investing. If you think about the stock market, the thing is pretty easy. It should be for you a source of passive income, like through dividends. Dividends are very important. And that's how you should see the stock market. You should look at it as a source of passive income. You build it up. With income you have left over after consumption of living expenses. So the lower your costs are, the more you can save, the higher actually your passive income gets long term. And that's you really should watch out for. So the strategy should be think about when you consume, when you buy new things. You should consider, can I use the old stuff longer? It depends, whatever it is. Is it a blender, a coffee maker? Is it a car? Is it a house, an apartment? How large has it to be, your house, your apartment? Think about it. Think about your everyday expenses. It starts in the morning with a coffee. Think about how old your car can be, and so on. Think about where you go and how often you eat out. Think about where you meet your friends. Has it to be in a high-end restaurant? Can it be in a cafe or somewhere else? Okay. The other thing is income, passive income through dividends. So the best is you buy boring stuff, like there are tons of stocks and energy, insurance, banks, food, oil, whatever you want. Just look out for it that something really is not hyped, not an overcrowded trade. Because those hip stocks that are really fancy and everyone likes, for example, right now you have Netflix, went pretty much up. You have Tesla. They may end up, they can go up higher, but I would not recommend that you buy, like everyone talks about, these kind of stocks, these hot stocks. I would not, because you should think and consider you want to invest at least 5 years, and so rather buy some stuff that is kind of out of fashion and not everyone talks about. The newspapers and the internet are not packed with it. I don't know, there are so many banks right now they are below book value. I think from a value point of view there is much better and more stable performance to get out there, like for example large blue chip banks or insurances or some oil companies or some car companies or whatever you want to take. And if you invest there long term, you will do very fine, and you get your passive income. That's actually all about. I think the stock market should be all about that, and not the quick, the crazy gain. And because that's what do you want with all this? There's so much risk involved in it. I would recommend you to do and to look for long term passive income. You check the Dow Jones. You reduce your living costs, your living expenses, or you keep in mind live below your means. Like our chancellor in Germany is doing that. She's a saver. She's very careful with her spending, and I think that's great. She's humble, and it's not show off, and it's a great. I admire that kind of a lifestyle for a chancellor, for a leader of a country, when she is not this show-offy person, and that she wants her quiet time when she's in Italy on vacation. I think that's wonderful, and there are very few people in her position that would do that. And I think that is something really you can look up to. Okay, so the stock market, to summarize everything, is there so you can get a nice passive income. The stocks generally are better than bonds because those companies have great products and services. And they're admired, and a lot of people need that stuff, and they have to also to pay to their bondholders 3-4%. So with stocks you have to make automatically more, because how can they pay 4% for their own debt. So they at least they want to make more return on their investments. So that's why stocks are better for the long run. When you invest at least for 5 years. Below that, I would not recommend you, if you need that money short term, to invest in the stock market. 5 years plus, look for great dividends, constantly paying. Even in the tech world, you find like Microsoft pays for 10 years. Or Apple is a great stock. I think it has a lot of cash and it's kind of solid. But diversify, get a lot of sectors in your portfolio. Some companies, foreign companies, some REITs, maybe get a nice mix, and then you will have long term a nice and add to your positions. You will have a nice source of income. Okay, good luck with it.